can I share with you the one question that I get asked almost always as the very first question on my very first phone call with a new client? And you may already know what this what this question is. It's, can you tell me what the interest rate is today? Or what's my interest rate going to be? Just tell me what my rate is. That's all I want to know. Which is a totally fair question, by the way. But here's the funny part. It's actually the wrong question. Because before you're under contract, your interest rate is kind of like asking what the weather's going to be for 6 months from now. Oh, yeah, sure, we can make an educated guess, but we can't promise it. Today, I'm going to explain why I care a whole lot more about a couple different numbers than your interest rate. And honestly, you should too. My name is Richard Sailing, and I'm a licensed loan officer. And one thing I try to do with every one of my clients is remove unnecessary stress and to be as transparent as possible and clear up any confusion around buying a house. And one of the biggest stress creators and misunderstandings is watching mortgage rates every day. People refresh rate websites like they're checking the score on the Super Bowl or checking the stock prices. 5.99, 6.12, 5.87, 6.03, 7.256. Meanwhile, they haven't even found a house yet. They haven't even looked on Realtor.com or Zillow. So let's talk about why that's like worrying about what shoes you're going to wear before you've decided where you're even going to go next week. The interest rate doesn't buy the house, okay? And I get it. That surprises a lot of people. But the interest rate isn't what determines whether you can comfortably own a home. Your monthly payment does. And because here's the reality. You don't write a check every month that says interest rate. You write one payment. And that payment includes the principal, the interest, your property taxes, the homeowner's insurance, possibly HOA dues, and possibly mortgage insurance. Those are the numbers that affect your budget every month. And here's something that many buyers don't realize. Mortgage rates can move every day, sometimes several times a day. I've seen it change as much as 6 times in one day. So when someone asks me, what's my rate going to be 2 weeks from now? The honest answer is, I don't know yet. I mean, let alone the folks that call me and say they're getting ready to buy in a year from now. Well, okay. Yeah, would you check the weather reports for your vacation next year? Probably not. So any loan officer who tells you that they know exactly what your rate is going to be weeks from now is making a prediction, not a promise. And I'm being generous in that description. So why do I estimate conservatively? Sometimes buyers ask, well, why are your payment estimates a little higher than what I saw online? Or a little higher than what, XYZ lenders told me? Well, that's easy. Because I'd much rather prepare you for a higher end of a reasonable rate than tell you a lower payment that may or not be available when you're ready to lock in that rate. So if your final payment comes in lower, that's fantastic. I love having that phone call. But nobody's ever complained when I tell them, good news, you'll be paying a less than expected. Nobody's ever complained about that. So imagine planning a road trip 2 months from now. Would you expect gas stations to guarantee today's gas price 4 weeks from now? Of course not. Gas prices move every day. Mortgage rates do too. The difference is you're making one of the biggest financial decisions of your life. So instead of focusing on today's price, let's make sure that your budget works, even if prices move a little bit before you're ready. So here's what I ask my clients instead. Forget the rate just for a moment. What is the monthly payment that feels comfortable after you pay all of your other all of your other monthly expenses? After you pay for the entertainment, the groceries for the week, pay your car insurance, all the other monthly stuff. Would it be $2,400? Would it be $2,100, $2,800, $3,500? This conversation really matters. Because once we know your comfort zone, then we can help you shop for homes that fit your lifestyle and not just today's rate sheet. So once you have a signed purchase agreement, the property address, the closing timeline, your financial documents, and you're ready to sign the initial disclosures, now we can make decisions about locking in your rate. And before then, everything else is an estimate. It's a guess. It's simply planning. After that, though, now we're making real decisions with closer to real numbers. So imagine, like I said earlier, imagine booking a vacation, 6 weeks from now. The airline can't guarantee today's airfare. They're not going to guarantee that forever. Prices change, flights will fill up, markets move, and mortgage rates work the same way. We lock the rate when the timing is right, when you're ready to sign the initial loan papers and start processing the loan, not months before we even know which house you're buying. The best buyers and the smart buyers don't spend 6 weeks or months worrying about a quarter point change in the interest rates. They spend that time finding the right home with their real estate agent. They're preparing their finances. They're making sure that the monthly payment fits comfortably into their life. Because at the end of the day, you're not buying an interest rate. You're buying a home that's creating a long-lasting legacy. You're building something longer for your future. So if you're thinking about buying a home, let's start that conversation the right way. Not what's today's rate, but what monthly payment lets me sleep well at night. That's the conversation that leads to smart home ownership. Now, if you find this helpful, thank you. Please like it. Please subscribe to my channel. Please share it because this is where I share practical mortgage advice that may not be as popular with other lenders, but it's the advice that really helps you into a home. And that's much more important to me, not confusion.